Hi, this is Kelly Wright at the Money Show, and I'm with James Stacks of Stacks Financial Management, and we're going to talk about bear markets today. So, the market peaked in 1966.
Right.
Had a pretty rough time until 1974, if you want to call 50% loss rough.
Yeah, it was. We actually had two bear markets between 66 and 74.
That's true.
And basically the market traded sideways until 1982.
1982, some interesting stuff happened. Paul Volcker was the Federal Reserve Chair.
Reaganomics.
Volcker decided to put a stake in inflation.
We basically killed this inflation psychology, and that in combination with basically what President Reagan got through Congress propelled the first bull market that went through 1,000 and stayed above 1,000 since 1966.
So we had like one of the greatest bull markets in the history of financial markets from 1982 until pick a date. All right.
Well, that would be, we had a bump in the 87 crash. That was a pretty scary Black Monday.
I remember that day well.
Then the big fallout came with the tech bubble first.
So we crashed and burned with the dot-coms and the techs. But things got really serious in 07, 08, 09, all right? So in context of past bear markets, we've had a pretty good run, all right? So the question in a lot of people's mind is, I know there's going to be another bear market sometime. When is it? Can you tell me?
We have not repealed the economic cycle, and we haven't repealed bear markets. They come around pretty much like clockwork. Usually, most bear markets come around about every 3 to 5 years. Now, it's been 9 years since the last bear market. So this bull market is longer in the tooth. In fact, it's the second longest. It's also the second largest bull market in Wall Street history. Now, if you want to look at the size of a next bear market, you can generally get a clue by looking at the size of the bull market, the preceding bull market. There's an interesting historical fact from the past 75 years, in that almost every bear market has taken back 1/2 or more of the previous bull market's gains. The only exception was 1956. Now, if you calculate that out from where the stock market started in 2009, which was about Dow 6,600.
6,600,
We peaked at over 26,000 in January.
Wow.
It starts to get a little bit worrisome, you know what I mean?
That's a 20,000 point move.
Yeah, well, it means that the next bear market could easily be a 40% bear market. It means that from a strategy standpoint, investors have to think about managing risk. It's not the time in the 9th or 10th year of a bull market to go out and throw caution to the wind, put all your hard-earned savings or CD money into the stock market and think that it's going to be there and be unscathed in a bear market.
True. So, all right, so we had a 20,000 point advance. So we're going to get an 8 to 10,000 retracement.
Yeah.
We should, if things follow the historical. Okay. So now we're looking at what, Dow 16,000, Dow 17,000?
Well, I don't like to forecast how far. The last two bear markets went a lot farther than investors thought. The washout of the tech bubble didn't feel too bad to value investors. They lost about 25% if you were in value stocks. Investors in the NASDAQ or technology index, it lost over 75%. That was a devastating loss for tech investors.
That's just brutal. It was just brutal. Jim and I can do this all afternoon, but we're going to have to cut it off for now. Thank you for joining me.